Welcome back. Now we're on the home stretch.
You're on the home stretch, but we're talking
about
economy.
Economy, it's been said that Nigeria's lack of an efficient and resilient financial system is holding back inclusive and sustainable growth in the country. And that's from a report from PricewaterhouseCoopers. We'll talk about why what that report can help us do and what we get in terms of the statistics from there and how it can help our economy. We have in the house the chief economist, PricewaterhouseCoopers, Dr. Andrew S. Nevin. Good to have you here this morning.
Good morning. It's a pleasure to be here.
So tell us about this report.
Okay, so we wanted to have a look at financial systems in some different countries, including Nigeria, South Africa, India, China, Brazil, just to have a comparison of some of the things that they're doing, and not to criticize anyone, but really to help everyone out. So we looked across some different dimensions. For example, how big is the banking system, financial inclusion, does everyone have a bank account, electronic payments, and some other dimensions, just to do this comparison.
I do know that you tagged it as financial system fit for purpose.
Right, so we don't need in Nigeria a financial system the same as the UK or Germany or Singapore. We need a financial system that serves our needs. So that's the question, is the financial system we have fit for purpose?
Okay, so give us a bit of more information on what you found out concerning Nigeria and the financial system.
Okay, so overall, as I said, we're not here to criticize, just to help information. And I've been working with the financial system here for more than 8 years. I've seen a lot of progress in insurance, banking, asset management. CVN does a great job. But a few things that we highlighted in there: financial inclusion. When we look at Nigeria versus other countries, not enough people are part of the financial system. Only 44% here, lower than the other 7 countries we studied. It's not good enough. We need to get that number up. People can't move ahead socially and economically unless they're part of the financial system. So getting that inclusion is critical, and we're a bit behind. Another area, just to highlight, for example, is we're a long way behind on mortgages. Someone can't go out and buy a house for cash. Very few people can. So if you're going to have a housing industry, if people are going to have the homes that they want, you need to have a mortgage system. And I own a house in Nigeria. I have a mortgage, and I can tell you the difficulties in getting the mortgage, very complicated process. So we're way behind in being able to offer the mortgage finance. So that's another example where we need to improve.
Okay, Dr. Nevin, we'll come back to you to look at a fit-for-purpose system, because there are eight characteristics that were outlined in that report, and you said you studied about 5 or 6 different countries, so we'll look at them in detail. But we need to introduce somebody else who's a financial market analyst who joins us from the United Kingdom. Charles Iyore, thank you for joining us.
Thank you for having me. And
it's good to have you in the new year. The last time we talked was 1 year ago in 2016.
That's true. Happy New Year.
Yes, indeed. So we have Dr. Nevin here. We're looking at a report by the PricewaterhouseCoopers that has to do with a fit-for-purpose system, a financial system, and then its impact on the Nigerian economy. He's talked about that they studied different countries: South Africa, Nigeria, China, India, and Brazil. Let me give you some of the things they pointed out for all these countries so that you can respond. He says South Africa, they're on the right track, but they have a long way to go. Nigeria's financial system significantly impeding growth, which he will explain later. China and Indonesia are underperforming in a number of areas. India's financial system is showing mixed signs of progress. Brazil and Mexico are moving in the right direction with e-payments. But what's your take on this report?
Well, I hadn't read the report, but based on what Dr. Nevin just said, thank you for having me anyway. Once again, let me make sure I follow those protocols. Based on what Dr. Nevin just said, it's clear to me, like I said earlier on, that there's poor financial inclusion. And then maybe I'll ask me to talk about these ones. For example, when you are trying to make soup, the proportions of what you have in the soup must be right if you want to get the desired results. Unfortunately, our proportions are not right, so we're not getting the desired result. It says we don't have financial inclusion. That is very true. It says those outside of the civil service and government don't have a way of engaging. That's very true. The size of the difficulty with getting mortgages is almost impossible. That's also very true. And most of these things are happening because our system is not properly organized, it's not properly structured. The central bank tried to do something through FSS 2020 about 4, 5, or 6 years ago. I don't know what the report was done with that report to ensure that all the units of the financial system work together. We need to look at that report and implement them. And I think, like you said, you couldn't have said it any better. The financial system is not inclusive. Our markets are not working. Thank you.
Dr. Nevin, Nigeria's financial system, with the kind of amount of the population, or the size of the population we have, and our financial systems, the two of them, you said they're not working as they should. There's no inclusiveness. But yet you call it an impeding growth. Please explain growth that is impeding.
Well, I think that the evidence around the world is the better financial system you have that's fit for purpose for your country, the faster you're going to grow, because you need access to it, obviously for credit, payments, people need to be able to save. They need to be able to do all those things for us to move ahead economically. So if the pieces are not all working together, we're not going to have the growth, and our growth's going to be slower than we want. And that's where we're at Nigeria. But as I said, we didn't come to criticize. We're all aware of these issues. I live here. I've been here a long time.
We need to break it down.
But if you take, let's take another dimension, for example, pensions. Pensions, we only have 6% of GDP in the sort of the pension system we've set up here. But actually, we pointed it out as a positive, because the distance that the pensions have come in the last decade is fantastic. There's almost 7 million people enrolled in it. More should be enrolled in it. There's almost 6 trillion naira worth of assets on it. It's very well run, very well structured, and it's just going to get better and better. So, that's a bright spot that we see. One area where we really think Nigeria could be doing a lot more, though, is electronic payments. So I'm sure you've all gone to Kenya, and of course everyone globally talks about M-Pesa, but when you're there, it is truly astonishing. Some will use M-Pesa 10 to 20 times a week to make an electronic payment to friends, the school fees, at the shop, and they can do it they don't need a smartphone, they just need a simple cell phone to do it. Our electronic payments are only 10% of it, so we're using too much cash. It's high risk, moving cash around, it's hard to get, and it actually has another big problem, which is it encourages corruption. If you don't have much cash in the system, it's hard for corruption. So that's one area we'd really like to see a lot of focus to drive electronic payments.
So in what ways do you think this can be made better? For instance, these electronic transactions.
Well, we think there's two parts to it. I mean, one part is, if you go back to the Kenya example, the regulators encouraged it. And in fact, our regulators have been very cautious about it. And even though they said cashless Lagos, cashless Nigeria, in fact, the amount of innovation has not been enough. The other side of it is there have to be some private sector actors that are prepared to step up, make some big investments to try to drive through that. But if they see the regulators really want to have electronic payments, I think that will come. I think one thing we've already done, however, a little bit like India, is of course we're driving out cash because we have such low value banknotes. I mean, the highest value note we have is 1,000 naira, which is only $2 in the parallel market. You might have seen what just happened in India, where the government withdrew all of the higher value notes. They largely did it to drive out corruption and to increase tax payments.
We do the higher value notes.
We've already done it. We've taken it. We don't have the higher value notes.
Okay.
So.
Now, there's something that you said in that report. Part of that report points to the fact that all the 7 emerging markets have done well in private sector lending. But you just said here that issues of mortgage are not, mortgage is not on the high level as it should be, and pension is not on the high level as it should be. But we'll look at that when we come back from this short break. Please don't go.